Hey everyone, welcome back to Corporate Decoder, the place where we'll make you feel like a Wall Street insider in 5 minutes or less. Today we're diving into a filing that is all about a significant shakeup, a move designed to boost a company's image and hopefully its stock price. We're looking at American Rebel Holdings Incorporated, and they've just announced a major change to their stock structure. This isn't just a small tweak, folks. This is a pretty big deal for how their shares will be traded and perceived in the market. So what is the story here? Well, the company is getting ready to do a reverse stock split. For those who aren't familiar with that, this is where a company reduces the number of its outstanding shares. Think of it like cutting a pizza into fewer but larger slices. Why would they do this? Often it is to increase the stock price per share. Companies sometimes do this to meet stock exchange listing requirements like staying above $1 per share on Nasdaq. In American Rebel's case, they are looking to regain compliance with that minimum bid price rule. Now, this reverse stock split is set to happen on the 3rd of October 2025. It is going to be a 1 for -20 split. That means for every 20 shares you own before the split, only 1 share will remain afterwards. The company's board has approved this and it is all set to go. They're aiming to make sure their stock looks more attractive to investors and to keep their spot on the Nasdaq. Now let's dig into some of the other news out of American Rebel. It looks like on the 16th of September of 2025, they issued about 12,000 shares of Series D convertible preferred stock. This was part of a payment for commissions on a recent financing they completed. The value of this was around $90,000. This stock is convertible, which means it can be turned into regular common stock down the line. The company has agreed to register the common stock that will come from converting these preferred shares within 30 days. Interestingly, as of the 17th of September of 2025, there were just over 10.2 million shares of common stock floating around. This reverse split will drastically change that number downwards while consolidating ownership. The big picture here is about perception and compliance. A stock trading at, say, 10 cents a share might not look as appealing to institutional investors as a stock trading at $2 a share, even if the underlying company value hasn't changed. This move is a strategic one to tidy up their share structure and hopefully attract more attention and investment. So what does this really mean for the company's direction? They are actively trying to improve their stock standing on a major exchange. This suggests they are focused on growth and perhaps seeking further funding or partnerships where a higher share price is beneficial. It is a common move for companies that have seen their stock price decline significantly. It is important to note that this reverse stock split mainly impacts the common stock. It won't change the total number of preferred shares the company is authorized to issue. However, it will affect the conversion rates for some of their preferred stock, meaning those convertible shares will be exchanged for fewer common shares after the split. Now, looking at this from a more analytical viewpoint, American Rebel Holdings is clearly in a situation where they feel the need to take a proactive step to address their stock's performance. The fact they haven't received a deficiency notice yet is a good sign, but it indicates they are anticipating one or want to get ahead of it. This reverse split is a tool, not a magic wand. Its success will ultimately depend on the company's underlying business performance and its ability to generate value for shareholders going forward. The company has engaged Securities Transfer Corporation to handle the mechanics of this split, which is standard practice. They are the ones who will ensure that shareholders' accounts are updated correctly to reflect the new share count. This reverse split will also impact stock options and warrants. The number of shares you can buy with these options or warrants will decrease, and the price to exercise them will likely increase proportionally. So if you had an option to buy 100 shares at $0.5 each, after a 1 for -20 split, you might have an option to buy 5 shares at $10 each. The total cost to acquire those shares would remain roughly the same, but the per price appears higher. On a separate note, the company also issued a press release on the 23rd of September about this reverse stock split. They are being transparent about it, making sure all investors have the same information simultaneously, which is part of what is called Regulation FD or Fair Disclosure. Attached to this report, you'll find the official document, the Certificate of Amendment, which lays out all the legal details of this reverse stock split, scheduled to become effective on the 3rd of October. Overall, American Rebel Holdings is taking a significant step to reshape its stock S appearance. The goal is clear: to meet listing requirements and present a more attractive investment profile. The real test will be whether this cosmetic change leads to substantive business improvements. They are betting that a higher share price will signal stability and potential to the market. It is a gamble, but one many companies take when they need to reset their stock S valuation. What do you think about this reverse stock split? Do you see it as a positive sign for American rebel holdings or a red flag? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give it a thumbs up and subscribe for more corporate insights, and definitely join our Discord community linked in the description for more in-depth discussions. Thanks for watching, and I'll see you on the next Corporate Decoder.